her daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Everybody, welcome Rusty from the mine.
Hey. Thanks for letting me out, Troy. I appreciate it.
He looks good showered up.
Well, I will say some of the chunks of coal he's knocking out right now, I'm very proud of him. And although a coal miner does not live a long time, we'll remember his family and we will be kind.
Thank you. Do we want to talk about the latest chunk just for a brief second?
Coal miners are always throwing out what they've done.
That's right.
Jeez, yeah.
It's not about me, brother. It's about the mine.
I
don't know where this is going.
Rusty, throw some chunks out.
So just FYI, we are with the automation stuff. We're pretty close to public release, but also on top of that, we've got Schwab/TOS in private beta in terms of testing it out. So getting pretty excited about both those things.
Pretty crazy.
And now there's going to be 20 people emailing me saying, what date is Schwab coming? What date is
the date is soon.
The date is soon.
Listen, let us lose our own money in testing it instead of you losing your money testing it. You should be grateful.
Amen.
Right?
Yeah. I met some Schwab guys this week at OIC, and they are funny guys. The whole people options guys, Dan, you know this better than I do. They're funny guys.
Oh yeah, they're most
they're
of
all
them
pieces of work.
Pieces of work would be. I mean, I would say 70% of the traders that I knew on the floor of the CBOE, including myself, could not fit in corporate, could not fit in a normal job situation. You know, I always related it to the movie Dirty Dozen. I mean, that was it. You know, you had these group of misfits. I remember just being in the IBM pit for 4 or 5 years, day in and day out, 8 hours a day. And I remember just the cast of characters there. You'd have some high school dropouts, you know, music majors in college, you know, just all different walks of life. But what was interesting, I don't know why this thought just came to my mind. I remember people in the pit. It's amazing how you can, I think of I'll call this the Ernest Hemingway syndrome, where Ernest Hemingway, even, correct me if I'm wrong, even when he was in the throes of a rough lifestyle, right? Alcoholism and all that, he still had that innate discipline. He'd crank out X amount of hours, right? And I saw in the pit, there were guys in the pit that during those 6 hours when the market was open, you could see their discipline, they kept it all together. And then the minute the market was over, it was like, you know, massive amounts of alcohol or major problems or, you know, multiple therapy sessions. But for somehow in those 6 hours, they epitomized the disciplined risk manager. And it's like, that amazes me, you know. You could see when they'd come in the morning, it'd be like, do you even go home? You know, did you, you could see the bloodshot eyes, but for those 5-6 hours, somehow it keeps it together. I don't know why I thought of that, but.
Well, Dan, I was telling him I could listen to these stories. Like market maker stories are the funnest to me. I really wish someone would write a book about it, but let's just take 5 minutes because I think it's hilarious to me. So, and Dan's the master here, and he was here during all this, so he can validate some of this. So one of the stories I heard, I asked a guy, I said, what was it like, you know, being 20 something, trading on the floor, like what were the mistakes, some of the mistakes you made? And one guy said, probably the biggest mistake I made was at 24, you're making so much money that you think you're going to make all that money the rest of your life. And so he said and he said there's lean times too, but he said the dumbest thing I did is basically I worked for 6 years there and then I bought a private jet because
as you do,
as one does.
Why wouldn't you?
And he said he was 30 and he had a private jet and he decided, well, I don't know what to do with this. I have to be in Chicago all day long. So he would get his clerk to fly across the nation and get lunch for everybody at their favorite lunch spots across the nation and bring it back.
As you do.
Yeah. So
I'll have to get, but let me just tell you on the other side of that story, if I could, just for a minute, the other side of that coin, when I went down there, I went to DePaul University, which is about a half a block away or block away. I was just looking for a living, a job, right? And that was it. I was interested in finance. I had an option class in college, but I would say, in my opinion, you hear the jet story. I'd say 70% of the people down there, most of the people I knew, I mean, the majority, you have your Sosnoffs and Nigerians and those people. It was a living, right? Some years you made better than maybe the average guy out of college. Some years you made quite a bit better, but some years you didn't. So it wasn't, that wasn't the typical private jet type thing. Now, I will tell you this, the thing that I enjoyed is like, I never felt like I left college, high school. I mean, because at the time, you're there 6 hours, you're busy for an hour and a half in the morning, hour and a half in the afternoon. You're sitting on a step. You don't leave. You're sitting on a step, which is a pit. Pits are elevated steps. And for, 6 hours, what do you do? Well, what do guys do? I mean, you talk sports, you talk, craziness. And the thing is, that's why it's like, I thought women who were down there were great traders, but most women, it was just, they didn't want to sit there for 4 hours with high school guys, this kind of nonsense. But I will tell you and I won't mention any names. I was guilty of this, but so what do you do when it's slow? And a lot of it, there'd be this cool hand Luke stuff where people would just think about high school mentality and you're bored. And it'd be like, hey, the trading lounge. I remember this. I was in the Micron pit, Barry next to me, young guy, just trying to get ahead, make a few extra bucks. Somebody's talking and he says, you know what? I could eat, 7 hamburgers in 5 minutes or 6. And first it just goes through and then everybody digests it. And then bets start coming. I'll bet you $500 you can't. I'll bet you. So all of a sudden, I think it was Pete and Jerry was in the pit, or somebody was like, had a little log ledger and they're writing it down. He said, okay, here's what we got. We got 10,000 on, he can do it. 5,000 with, blah, blah, blah. Next thing you know, the crowds, there's about 100 people. We take the elevator up. Somebody went to McDonald's, got 7 cheese, whatever it was. Barry was looking good, right? He had 3 or 4. And I'm encouraging him. I was actually rubbing his shoulders like cool hand Luke, like, Barry, you could do it, my friend. Come on. Next thing you know, after 5, he went from looking good to it was all over the floor. But you know what? I stayed there with Barry until he got his. Everybody else.
You're that guy.
Yeah. This is over. We're done with. And
it's like a scene from Rocky. You're rubbing his shoulders. You're like, get back in there. Pound another burger.
You could do it, my friend. The other thing I will just tell you, encouragement, and I was involved with this. It was not, I don't think after 20 years, it was wrong. I'll admit it.
You're a mature guy now.
I don't know about him, but here was the thing. So me, and I'm not going to mention the other person I was involved with this. I don't want to bring him up in this. But we were bored and he would call me and say, what are you doing? And I'd say, well, not too much. It's kind of slow. He says, you're ready for a run. And we don't mean running like jogging. I said, let's do it. So he would have these little, you ever see those little stink bombs you could buy? They're little in a capsule like this. Little kids in school would play, and you bust it and it's like this, big gaseous type smell, right? And smell. So this guy was smart, much smarter than I was. And he said, so we found a way, we would walk down the elevator at the CBOE and he'd throw like 8 of them into the ventilation system. So it would, and this was diabolical. And this would, all of a sudden, we would go down to the trading floor quickly, like 2 little kids in a candy store. And you could see 7 or 8 pits, everybody going like this, and who did that? And who, and we would yell like, yeah, whoever did that, they better stop, you know? And this would be like once every month, once every 2 months, doing this. But it's just like, you think of stuff, but this happened all the time, eating things, you know, I can outrun you around the block or something like that. And it just
get the ledger out. Who's got money on Dan?
Yeah. The eating thing was the fun. The eating thing was just, and see how serious grown men. Last thing real quick, I'll tell you, the funniest guy I ever met down there. This is a true story. Craig, he was about 280 pounds, but he was older, but he was just every day he'd come in just like giggling and laughing, having a good time. And as we start talking about, because you have a lot of free time, so you're talking all about, you know, everybody who you're there. Craig, one of his 2 best friends growing up was Bill Murray, the comedian. And he would hang out with Bill. And I say, how could you not see this? I mean, Craig was just as wacky as you can come, because when you see Bill Murray, you just see that, you know, he's just a funny guy. So it was, I think that's what people miss when you left the CBOE. It's like, I got to get a real job. I gotta go into society and act, you know, are you kidding me? You know, after being literally in a high school kind of mentality for 20 years, other than, you know, you could make a living sometimes, but it was an interesting, and the one last thing, the reason why people didn't say, well, why wouldn't a lot of people go down there? Well, I remember my first 3 years down there, I didn't make minimum wage, right? So I lived at home because there's no like 18 levels, you know, to get up to vice president of whatever. You're either a trader or a runner or a clerk, you know, and that's it. And you just basically need someone like an electrician to teach you the craft. And that doesn't even guarantee it, because, you know, I would say 70% of traders, that's why I'm saying the plain story is an exception, because I would bet 75%, in my opinion, of traders who got a seat or leased a seat to be on the CBOE didn't make it, right? And the reason is either they weren't, if you didn't get in with someone who basically could train you to do the right thing so you don't blow out. But the other thing is this, your overhead was probably $25,000 a month, 20 to 25,000. So if your first 25,000 goes for your seat lease, which was like 10 to 15,000 a month, all your option commissions, you know, you're trading a lot of contracts. And then here's the thing. So your first 20 or 25, you break even. Then let's say you make $5,000. 2,500, it's usually 50-50 deals. 2,500 goes to your backer, right? 2,500 goes to you. So for you to bring home $3,000 a month, you had a big nut to cover. And the other thing is, it is like a cool hand Luke environment, because everybody knew each other. And Sosnoff backed a lot of traders too. So if let's say you blew out for Sosnoff, right? You lost more than you should. First thing you do the next day is you're knocking on doors. Hey, I need another, like cool hand, I need another bankroll. Who will bankroll me? And you could usually get bankrolled a couple times, as long as you didn't do anything too stupid, right? Or lose too much. But after 2 or 3 times, the doors would shut. They just figured, you know, you had 3 shots. And really a lot of it was just, if you would just do what your boss did, right? You could at least hang in there. But I think a lot of people had this idea, especially newer people, I can come in and I can determine which way the market's going. I can pick direction. And that usually was, you know, I'm like, why would you do that? I worked with John Nigerian and his brother Pete for many years. And it was like, they didn't care if you lost money on a day by, you know, overall. They cared if you did the right if you were supposed to adjust at this point or had a guardrail on, as you would call it, hey, as long as you got out when you were supposed to and did the right thing. But if you came in the morning meeting and said, you know what, Fibonacci told me to, I was long 10,000 deltas as we were going down, and I really believed we were coming back. I had a belief in my stomach that we were coming back. That would not work, right? In the morning.
So you're saying if they gave you more grace if you followed the system. Is that
Absolutely.
what you're kind of saying?
If you just had, because the day before we would have a morning meeting, and each of the 6 or 7 traders would say, look, here's my position. I'm short gamma, positive theta. If this vehicle goes down to this point, I'm covering half my long deltas on the downside, right? That's risk management. And everybody would say, I agree with you. So you knew you had to, even if you did that, we knew we were going to be down money. But if you came in the next day and said, you know what, I was supposed to cover, but I suddenly got some revelation, right? And I felt we were coming back. Well, if we came back, you're okay. But if it goes down, you basically lose your job. So for me, it was like, why would you risk they're with you, right? You said the day before, you did the right thing. Don't try to be a hero, right? And anyways, it was.
Well, I could listen to it all day. And one more thing, just that I'm going to look this up, and we might do a whole episode on this just because it's crazy to me. I had 2 people confirm together, and they said, you can actually look this up. They were trading September 11th, 9/11 that morning.
Oh, wow.
And they said before, or maybe it's the day before, I can't remember.
Day before, because it was before.
Yeah, it was closed. Yeah,
Yeah,
that's right. So the day before, a ton of long puts came in. Like they flooded the market. And he kind of passed over it, and he's like, so that basically I found the only thing that was open, which I think it was IBM. And he got his people, he had backers to sell everything in IBM because it's the only stock he could short. And that basically helped him break even for all the other positions he had. He had one guy in the pit in IBM, and he's like, sell all of it. Sell everything you can before the market closes. But so he passed over that real quick. And then I said, I kind of came back to him. I was like, I just want to be clear. Are you saying that some people knew that 9/11 was about to happen?
Mm-hmm.
He said 100, there's zero doubt. Like it's the most factual thing you can see in the world. Like looking at the order flow coming in the day before, people knew that something big was about to happen.
Oh yeah, Jan Nigerian talked about that too in some interviews, and seeing the order flow. So somehow, it definitely leaked out something that and people were playing the downside. Saw the paper. Now I don't remember that, but again, it wasn't as widespread. I mean, we were sitting there ready to go to the trading floor on 9/11, and the first plane hit, and then horrible accident. And then when the second plane hit, 10 minutes later, you hear an announcement: the trading floor is closed. Go home. And so it wasn't like, I don't remember in our office, and we were decently wired, I would say, with Nigerians. I didn't hear anything that day, that day or two, and I didn't hear anything coming in like, it's kind of weird. There were a lot of put buyers, but obviously if you were in the right pits, it could have been a lot of, did he say which stocks? Was it more defense stocks or?
He said, I can't remember if it was SPY or the equivalency of SPY, whatever it would have been at that point. It was the SPY pit.
Okay. OEX was I think.
OEX. Oh, wait, that's right.
That was the precursor of SPX.
Yeah. Yeah. So, but anyway, apparently he said there's a report that came out a couple of years ago that said you can look it up, and basically the Saudis were shorting the U.S. market the day before.
You're right. I heard, wow, the Saudis.
Yeah. So anyway, it's to be a Saudi, September 10th, 2001. That's unbelievable. Anyway, well, we'll keep going. Big news coming back from OIC. I will say this: you guys get it here first if you haven't seen it publicly already, which it's public. NASDAQ is considering they put out a proposal to do 0-day expirations on Magnificent 7 stocks. So you can trade 5 days a week for that. Any thoughts on that, guys?
I'm
We're
concerned
ready.
with
Let's do it.
the only thing I'm concerned with on that, I think it's wonderful, right? But when you're talking, SPX is a $5,600 vehicle, and now you're getting into much cheaper vehicles, right? $111 stock or whatever, Nvidia or some of these things, and you just wonder from a premium what it is. I mean, I still think it's extremely positive that you're going to trade, that will help the volume and stuff, but I don't know if that will be an issue. But 0-day in SPX is different. You've got so many different strikes. You have so much, there's so many
the brokerages
of things to do.
The brokerages was interesting. I was telling Matt and Rusty yesterday, what's interesting is, retail traders, you always have this idea of like, it's us versus them. It's retail guys versus the institution. And what I was saying, what was interesting going to this conference, an institutional conference, is they don't see it that way at all. They see themselves as like the brokers versus the exchanges, or the brokers versus the market making firms. Like, everybody has their own subset of group. And so like when NASDAQ put out that proposal, all these brokerages were like, that's a terrible idea, because the brokerages are the ones that we're going to have to deal with all the settlement of all these crazy things. So NASDAQ was like, yeah, I mean, we might, because one of the brokerages was like, so you're going to allow people to trade up till 4 p.m. expiration on a 0-day when earnings comes out at 4:02. That's the dumbest thing I've ever heard. And NASDAQ was like, well, we might limit it we might not allow 0-day on earnings dates. And that seems like that would help a lot, because people don't understand. I mean, this is a fundamental thing.
That makes a lot of sense to me.
You can be $2 out of the money on a put, and absolutely on the next day wake up with, short 400 shares or 500 shares or 1,000 shares.
That's the thing. You don't have the assignment problem in SPX, but now all these stocks, you're dealing with assignment, and you're right that you look at the pricing on some of these things as you get to the end of the day, and you're right, that doesn't make sense. Well, because where's it going to be in 15 minutes or whatever? So I mean, it should be interesting.
One more thing. I know I'm all over the place, but just throwing the news out. Steven, great question. That's what I asked. My little new brain, I asked these big dogs. I was like, why don't they just have cash settled equities?
Yes, 1256s.
His response was, because this industry is the laziest industry in the world.
Is that what they say?
Yeah. That's what
oh my goodness.
So that was the answer. Last thing, I think retail guys would like this, so I'm just gonna throw it out there. They were talking about some of the stops, those big stops that people had and getting trades busted. And they were talking about, there's a gentleman, I'm sure if you're in the Discord at all, you've seen this stuff, where he got, was it $100,000 loss?
It's like 115,000. Yeah.
115,000 busted because he had a stop, and he had it busted.
Reverse busted. Yeah. It's kind of weird. Yeah. It was a weird.
And I was talking to these guys that were on the floor a bunch, and they're like, that happens all the time. There's nothing you can do. They said, we had that happen all the time. You look at your account and they call you the next day. They're like, hey, we did the thing. There's no remedy for that. So what was interesting, and that's right, Tom Lee. Yeah, no one wants 2.5 million shares of anything on Robinhood. So you wake up in the I'm going with Tom Lee's story. So one of the things that was interesting, this guy put out there that he did, I mean, it's not a proposal or anything like that. He just had this idea. And I thought about this. I was like, this is actually brilliant. He was like, how do you fix that? How do you fix all these busted stops? Make markets on the stops. So sell the stops, put options on stops.
Wow.
That guarantees it. And I told him, I said, if you do that, all I will ever do is buy stops, options on stops. I will never trade another equity in my life.
That's right. That's absolutely right.
I will be the stop guy, because because it's IV. You think about how that would work. You get IV, and as IV rises, as vol rises, those stops are going to become more expensive. so the whole market of like selling premium and
Oh
stocks.
my God. This feels like the Big
This
Short.
sounds like the Big Short. Yeah, this is the
Yeah.
credit default swaps, the bets on the CDSs that are bets on that. Like,
That's
Jeff
right.
Gordon
My
Ramsay's going to come
goodness.
cut in here and explain what a option on an option multi-order derivative is
I'm
going to
gonna
look
get-
like
I'm
chopping
gonna-
up old meat.
I'm going to get my quant on it. I'll say that. I'm going to get my quant on it for sure.
We got quants now? That's sweet. I didn't know we were moving up in the world, Troy.
Everybody above the mine gets a quant.
Gets a quant.
Well,
One
okay.
quant.
Yeah. And side note, personally speaking, my quant is in that. So, but anyway, all right. So let's look at a test. We're going to finish this sell and may go away. And I'm going to tell you why we're going to finish it, because I actually think this is going to be the reality of it. So, all right, let me share this real quick. Can you see this?
Yeah.
Yes.
Okay. So sell in May and go away. What happens if we didn't sell in May? What happens if we just sold put spreads in May and went away? Now, this isn't a great test. I mean, basically, you are selling a put spread in May. These are specific dates. These are all the Mays going back to 2020, basically. And you're selling a 30-day put spread 25 wide. Open at 9:45 in the morning. When I always get people, they're like, why did you choose 9:45? I didn't. My whole premise with this a lot of times is to pick a time and go from there. Like that's the beauty of backtesting. It was like, if I wanted to take this trade seriously, I would then go and change different times. But I like to start with the test. This is a side note. Just pick a time. Just start with the time. Maybe your thesis has a specific time, but if it doesn't, just pick a random time and see. You know, there's nothing. We don't punish you for picking random times at Option Omega, and then going from there. So, anyway, that's a side note. But the only caveat is it's a stop loss of 300%. I don't understand what's wrong with my voice right now and why I can't speak. And it does fine. I mean, guys, initial thoughts on a test like this?
I mean, in my mind, this is a back test. This is not a back test to trade. This is a back test to, you're using it to prove a point, which is the adage, sell in May, go away, does not jive with this back test. When you look at this just on a back test basis, you're winning nearly all the time, which is unique, but your drawdowns are 4 times. You know, your max drawdown is 4 times as big as your CAGR. Your average loser is 4 times as big as your winners. So from the standpoint of, does this support sell in May, go away? I mean, it doesn't. It's also a 25 delta. So there may be more nuance. If somebody really wanted to eke out, like, how does it do closer to the money, whatever, you could certainly eke it out and do that, because we've got a world-class backtesting tool. Just takes a few seconds. But yeah, this backtest does not make me want to sell in May and go away, to answer your question, Troy.
And the other thing real quick, you know, when you think about the whole sell in May, go away concept, you know, somebody I was talking to said the last 10 years it hasn't worked. And overall, I think if I read this correctly, correct me if I'm wrong, the sell in May, go away just means that not that May was necessarily down, but it was up less than the other months. I think it was up 1.8%. I don't know if I'm correct on that. But the big thing, if you look at a sell a 25 delta put credit spread in a period, whether you pick from 2020 to the present, whether you pick 2016 from the present, we've been mostly up market, right? It's mostly an up market, and selling a 25 delta and letting it expire gives you even more probabilities in your favor. You have an up market, you have a 25 delta, so it's going to work. Now, what it doesn't say is, you know, your losers could be, depending, you know, how you manage these types of trades. You know, when you have a decent probability like this 25 delta, the risk reward isn't something to write home about, right? So you do have risk there but you know, in a period that's basically gone up and you have a 25 delta, yeah, you should expect to have a 85-90% win percentage. But depending on your rails is going to determine if you're still walking and breathing at the end of the experience.
Yeah, I mean, in my mind, so this this subject is solved at a base level, it's like Mythbusters. Like if the fact that this is what I'd say, if someone came to me and said, "Hey, you're an options guy. Is it true what they say? Sell in May, go away?" I would say, "Well, you can sell puts, which basically means that you think the market's going to stay the same or go up and win in May." If that answers your question, and that's enough. I mean, I'd be like, maybe there's some outliers, but like the last 5 years at least.
Yeah.
This is my theory, and someone who's smart would challenge me on this and be correct. I actually think the last 5 years have been some of the craziest. Well, actually, to the point from the OIC conference, volume has grown. I hate the throwing out the term exponentially because everyone uses that, but I want you to actually believe that. Like volume in options trading has grown like tenfold since 2019. Like tenfold. I mean, it is a completely different market, and you've seen this if you guys back test for any length of time. Finding a test that works from 2013 on is really, really difficult. And why is that? Well, because the more data, the more confident you get in your trade because time changes markets. But to that point, time has really changed markets in the last 5 years. And so that's why, to be honest, I mean, we don't look at this data, but I guarantee this is the case. Most people start testing SPX dailies. That's their starting point for a strategy is SPX dailies, 2022. And so maybe in the past, maybe in a pre-COVID environment, cyclically you could sell in May and go away, but man, not with the options market now. Mm-hmm. I mean, you got so many 0-day guys sitting there trading that weren't trading 6 years ago. Right. And so it's a different game. But anyway, so I mean, we'll keep going. Next week,
Troy, what did the institutional people, since it was mostly an institutional conference, they wouldn't seem to me to be big 0-day people. What's their thoughts on the whole 0-day stuff?
Two things that was wild to me. So one of the guys made an interesting point. He said everyone assumes that the 0 DTE guys, that market makers hate them because they and I've heard that before, guys. I don't know if you've heard that, like the idea that market makers don't like 0 DTE traders, things like that. One of the guys made a good point. He said market makers absolutely love 0 DTE traders, because of the flow, obviously, but the transactions. But two, he said, and Dan, you'll know this more than I do. I always get this a little confused, but basically the assumption with gamma, with market makers, is they are the market is long puts and short calls as a collar. Like most of the big guys are collaring. And so market makers having to take that other side or selling puts against that, or they're short stock.
Yeah. So
he was saying with 0 DTE, where suddenly you're getting a lot of people buying puts 0 DTE that, selling, forget that, selling puts 0 DTE, selling premium. Those market makers love it because it actually helps them flatten their skew risk.
Sure.
Good point.
Sure. JSP, retail's JSPing is what.
That's right.
Yeah.
So I thought that was super interesting. The market makers, they, from a risk standpoint, they actually enjoy being able to they're actually safer being able to buy puts 0. So their assumption now is that most of the market makers are long puts on 0 day.
Well, and you made a great point because it's hedging. When I was in the pit, the problem is most of us in the pit had the same position. And so we were stuck, right? And we had to take the risk. Whereas now you said with the 0 day, they can hedge if they got too much short or long gamma, they can hedge that. So they're going home with safer positions, and which is good. And the other thing is, if I'm going home with safer positions as a market maker, I'm willing to make better markets, right? If I'm not able to go home safe at the end of I remember being in the pit and people would be, and I'd be like, I'm short gamma. I'm not in a good risk position, and guys would want to come in and buy puts. I'm like, I'm raising them, right? I'm already short a ton of puts. I'm not selling anymore. So now, if you can go home safer at the end of the day, market makers, they're willing to pass that on to the consumer by giving a better market, better size. That's the key. We were forced to, those are CBOE rules. I've got to make a two-sided market. I've got to sell, even if I'm short a ton of puts, I've got to sell puts a certain number. But if I have a safer position, I'm willing to sell more puts at any given time. So that's wonderful for the future liquidity of people getting in and out. And what you notice with the 0-day stuff, liquidity is wonderful in SPX. The fact that you can do double calendars, think about it, double calendars, a two-legged, and get very good liquidity is a wonderful thing. I mean, even in a crazy, Matt, you and Rusty were trading full head of steam during the craziness.
Yeah.
The last month and a half.
The liquidity was fantastic.
Yeah. And I haven't heard either of you really complain that.
Oh, no complaints at all. Easy to get in and out, short-term, longer-term, medium-term double calendars. Easy.
That's it. But that would not have happened before 0 days came in the pit. No way.
Well, and two things with that. I think part of that, because they are long puts as a concept now, that's causing a lot of the reflexivity we see in the markets. So suddenly they're taking profit throughout the day. Then what are they doing in that? They're selling puts. So there's a reflexive nature to this mean reverting back to these changes up and down, I mean, it's really rare now in the market that you have a sustained move in one direction. And we saw this yesterday. We're up 85 points yesterday.
Yes.
And we dropped 50 points.
Oh, that end-of-day movement.
In the last 15 minutes. What is that? Well, you could say, well, like someone knows something, and that could be the case. But also, people are just taking profits.
Yeah. That's more like it. Yeah. That's more just, yeah.
And so last thing I'll say, and then we should probably head out for the day, but I'm looking forward. We're all going to try to go up to OIC next year, wherever it is. They change locations every year. But Matt, Rusty, one thing I will say is if you go to OIC with me next year and we get Dan, we can convince Dan to go down there with us. That's going to be like walking in with Larry Bird to the NBA Players Association.
That's right.
Like he was my gold coin when talking to these people. I'd be like, these institution guys, like, have you heard of Option Omega? Strangely enough, a lot of people had, but some people hadn't. And then they're like, no, what is it? And I was like, have you heard, Dan Sheridan? They're like, oh, Dan, oh man, how's Dan doing? Like, he's just a legend. Yeah. So we might all wear Option Omega shirts next year. We might also just wear shirts that say, I know Dan Sheridan. Ask me how.
Yeah, a member of the Goofballs Association of the CBOE.
That's right. That's right.
The only question I have, speaking of, Chicago and all that, is the Pope an options guy? I'll just drop that last.
Yeah.
I would love.
How does he feel about these NASDAQ DTE equities?
I would love Poplio. Went to Villanova. He was a market maker for 15 years on the CBOE.
That'd be awesome.
Yeah. Very last thing I'll say to that point about the stink bomb thing. This is, what the difference in guys and girls are ultimately? I mean, this is a filtering mechanism, a heuristic. Girls, if let's say some silly girls are going to drop some stink bombs into a event, the girls are not going back down there to smell the thing. That's the difference in guys and girls. Guys will drop the fart bombs into the vent and then go down to where the fart bomb is going off just to see it. That's the beauty of the difference.
Right. That says a lot about guys and their nature. They're
I know.
Right in a lot of areas like that, especially 100%. Me and that. It was
I can't imagine a world where if I dropped a stink bomb and I would not want to be down there with them as to watch people smell.
Oh, yeah. I mean, that was the whole purpose of it, is to go down there. And many of them had a clue that we were, me and my accomplice were part of this unit that delivered these stink bombs.
Oh, yeah.
But it wasn't proof. And some of them were just, again, you're talking people that are totally different personalities. They could be bankers, and they're like, this is a professional, we're business, and it's like, come on, we're not, right? This is just, we're not this professional.
Well, the thing I'll say is that today, no doubt Trump via a tweet or a press conference or something will go we'll put a stink bomb into the vent of someone's option position and go down and watch it. So may we be on the other side of the stink bombs. May we be on the
That's right.
whatever side we need to be. So guys, listen, have a great weekend. Plan on talking to you Monday. We'll have some more ideas to throw out there, and look forward to seeing you soon. Rusty's got to get back down there, so we'll